Hello traders, welcome to the video. In this video, I want to show you another powerful volatility index market. So this strategy, you can use it to sell the market. You can also use it to buy market to the upside. Don't worry, I will show you some examples. So I want this video to be a very quick one and short. So I will quickly show you settings to the indicator and show you how this strategy works. So if you look carefully on my chart, this is the 5 minutes time frame and this is volatility 100. So to select your indicator, click on this indicator icon over here. As you can see, I have just 3 indicators. I have MACD, moving average, and relative strength index. To select the MACD, click on the F icon on the main chart and search for MACD. Make the fast EMA to be 12, slow EMA to be 26, MACD SMA to be 9. Apply to close. For the styles, select color of your choice. For the signal styles, select color of your choice. After that, select pizza of your choice and click on save. The next indicator is the moving average. Click on the F icon on the indicators Windows 1 and search for moving average. Make the period to be 1, shift to be 0, method to be exponential. Apply to first indicator's data. This is very important. For the styles, select color of your choice, pizza of your choice. After that, click on save. And the last indicator is the relative strength index. To select that, click on the F icon on the indicators Windows 1 and search for relative strength index. Make the period to be 1, apply to close. For the levels, click on this pen icon, select level 85 and 50. For the style, select color of your background. If your background is white, select white. If it is black like mine, select black. After that, click on save. So if you follow my settings correctly, your chart will look exactly as what you see over here. So what do we want to pay attention to? So the only time frame we'll be using for this strategy is the 5 minutes time frame. It also works on the 1 minute and the 15 minutes time frame. For the 5 minutes time frame, I find it to be very, very effective. But this strategy works in all the volatility index markets. So we want to be paying attention to the recent zone before you have this dip into the 85 level if you want to sell to the downside. This 85 level is the overbought level. So when the market is overbought, we want to look for market to spike to the downside, break structure, and then we look to sell the market to the downside. And when it is oversold, we look to buy market to the upside. We want to wait for break of structure or the market structure shifts, and then we look to buy to the upside. So you can see at this point, market has been rolling to the upside for some time. Then you want to see it enters into the 85 level, just like you see over here. So once you have that entry, then you want to mark out your recent level. You can see this point is also another point. This is another point. This like a swing low before market make a high, swing low before market make a high, swing low, market make a high, swing low, market make a high. So let me use my tool to mark those areas out. We have one here. We have another one here. So the ones we want to pay attention to is the last one after we have a high that pushes market into the 85 level. So if I take these two, you can see this is when we enter the 85 level. This is the last high and this is the swing low before this high. So you want to see market comes below that level like this, retrace a bit to the upside, then falls to the downside. So once you have this break, you want to have your entry around this point or below this point. So let me remove that so that you can easily see the chart. So once you have market close below this low, just like you see over here, you can enter your sell. Your stop loss will be above here. Then you will target times 1 or times 2 of your trade. So if you risk $50 on this, you can target $50 or $100 depending on your psychology. So one thing you should know is that if you target $50, market can quickly run into that $50. But if you target $100, market will take some time before it reaches that level. But you can see that at this point, all the levels are met. So this is a buy condition again. You want to see market drops to the downside, pushes this indicator into the 15 level. Like I said, you want to mark the last support zone before you have a new low after you have it enters into the 15 level. You have the entry here, where you can see that this is the last swing high before you have this low. The market reveals to the upside, creates another low. Then this will be the next high to pay attention to. So once your market closes above that level, just like you have over here, you enter your buy. Stop loss will be below this low or below this low, depending on how far you can hold the trade. Then you will target ×1 or ×2. You reach $50, you target $50 or $100, depending on you. You can see, and then you can trade your stop loss depending on you. That is not what I will teach you. And this is another one over here. We have market rallies to the upside, pushes this indicator into the 85 level. So once you have that, you want to see it generate a candle below this swing low. So you enter your sell after the close. Your stop loss can be above this swing or above this swing. Then you will target ×2 as the market comes, retest this level, then continues to fall to the downside, giving you that 1 to 2 RR. So this is another example over here. The market generates a high, low, high, low, high, and a low. This low pushes this indicator into the 15 level. So you can see that it is oversold already. The market is ready to buy to the upside. So once you have this low, then you want to wait for market to close above this high. Then you can enter your buy. Your stop loss will be below here. Then you target ×1 or ×2 of your entry. So if you risk $50 on this, you make $100, depending on your risk management and how much you risk per trade. But one thing you must pay attention to is that you must have a proper risk management to trade this way, and you must make sure that you understand how this strategy works properly before you can say you want to put your money behind it. So if you have a little bit idea of price action, maybe support and resistance or trend line, you can also combine it with this strategy to get more out of it, because it will really help you in your analysis. So after this, I want you to go back on your chart and backtest this strategy, see for yourself, see how it works. Then you can decide whatever you want to do with the strategy. If you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on the notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching. So after this, I want you to go back on your chart and backtest this strategy, see for yourself, see how it works. Then you can decide whatever you want to do with the strategy. If you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on the notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.